All right, ladies and gentlemen, I haven't known that when it has to do with trading synthetic. I've talked to you about derivative synthetic, and then this is where trade. But something that should be in your mind is that it's purely you're trading against the broker's algorithm, and so there's no doubt about that. So, um, that like if you're trading on Weltrade on the derivative synthetic, you're trading at least among traders and against the broker's algorithm. Then on Weltrade. Uh, you will still notice a kind of shabby kind of structure because it's the algorithm until over maybe the next 2, 3 years, we'll have a shaped algorithm. So that's one of the things. So most of our trade, when you go the other way around, don't panic because it's just the algorithm. Look at this. I took this trade in the morning when I was doing one training, and then you can agree that this market is going to go. So now to trade synthetics, what are the same thing? It's the same process that you're going to do. So if you look at the few things you're going to look at, for instance, let's go this way. All right. So let's go this way. So take it from here and what we're going to need. Number one, we're going to have the key levels. We're going to have key levels, right? Key levels. So you're going to have key levels, and then you're going to have your daily candle. Then you're going to have structure. So you're going to have okay, you're going to have your PDRA, right? AOF. So you're going to have maybe supporting tools. So as a beginner, you could have supporting tools like MACD and EMAs, and of course the FIB. So the FIB because of PDRA, so FIB. So you can say using FIB. Okay, so let's go this way. Can say using what? Using FIB. All right, so let's go quickly. So let's return this. Let's enable the candle. So I take my favorite. So if you're a beginner, always trade with flips compartment. So let's go to daily. So when we go to daily, it's very simple. Let's look at the key levels. Let's look at the key levels. So it's obviously this one is just modulating up. So whatever less, so just do something to have a key levels. So let's work out key levels, for instance. So just take your horizontal line. You can thicken it. So let's take here and then obvious point. So I think we're okay this way. So because don't need to travel too far. So maybe you can just keep one here. All right. So here we go. Let's go. So we've gotten this now. So let's quickly go now. The next we go to, so okay, so normally these are daily candle. So what you want to do is to look at where is the high and the low of the previous day candle. You get it? Okay. So can take your maybe just a trend line to take your high and your low. So I can turn it to black. One of the annoying thing about World Trade is that the structure, I mean the tools are not yet well organized. Okay, so here, if you look at it, you see there was a sweep. So that means we're going to be selling. All right. So there was a sweep we're going to be selling. Okay. Now, very, very simple. So now let's go. Were previous day high and low. Now, so there was a sweep. You probably will not see it properly by the time you go to 4 hours. So there's a sweep. Now we have the market a roll from here. That was a massive one. Now, so let's quickly go back to because this is the major break. Okay, so probably you should expect the market to return back to this point. Oh, yes. So now let's go to daily 4 hours. 4 hours, and some people use 8 hours. So 4 hours and 1 hour will be your structure. Okay. So now let's look at it. So based on structure, let's look at recent structure. So recent structure break should be somewhere here. Let's take this one. Okay. Then you have a structure here, break. So recent structure break is over there. Okay. Like I said, I think there was the previous day. I think it was taken out. So now that means ordinarily if the market was still going to go up, so you're going to come here as this other block. Okay. Do you see that? So now, if this is, so we have a structure here, a breakout structure here. So here we have, so we can take, now to get our PDRs, we take from the swing, you have to recognize the swing level. This manias with this porter, you will set and reset your fib or your tools. They will still keep turning it back. That's the some very, very, very unorganized. So this is how I do my own setting. All right, my own Fibonacci retracement. Okay, I enabled this, but I put it minus 0.5. And I'll tell you, what do I use this minus 0.5? That's my profit target. This, I create this one as my Fibonacci extension. All right, so look at my setting. If you want to copy it, you can copy, just snap it. So I take off the background, I take off the price, and I go to the level, I change it to percentage, and I turn this one to the right side so that I tune this top my chart, and that's all, right? So when that is done, then I click OK. So you can see my, so if this market's going to respect this, so you can see everything here now align with the PDRAs. All right. So that means the rule is simple. When you are buying a market, so when you are buying a market, it should, if it's a buy, then you should be looking to buy at a discount. So professional don't buy anyhow. So they want to buy at a discount, right? If you are selling, you want to sell at a premium. So that means you're waiting for this market to drop to this point, and then you look for a buy on 4 hours. Now you can further do your structure down, right? By going to 1 hour. Okay. So stepping to 1 hour, sometimes people do to 2 hours, but I don't have that luxury of time. Now, so if this market were to be a very wide structure, so you have this is still normal breakout structure. We have a kind of induced liquidity, and so the market should travel back here, except otherwise, this opposing candle, it happens, it's only on 1 hour, could bounce from there. So you pay attention, all right? So if not that, if we refine this point now, so you look at the Fibonacci, so that means you're going to look at the market actually created different region here because on 1 hour time frame, you see a break here, you see a break here. Okay, there's a break here, low, and then we saw a break. No. This is the complete break. So, but the low will be here. So, if that's going to be the case, if we take it on 1 hour time frame, fib retracement, so that means we're going to take from here to this point. So that means approaching gradually. And so you still have all of this point. So that means on this 1 hour, so what's going to happen is that it's going to be recognizing this point. Okay. So you can align. So just to see some content or a context. Okay. So just a context and all of that. So invariably, so you're waiting for the market to drop to either of this region. So 30 minutes is going to repeat virtually what 1 hour has done. Okay. Then we go to, yeah, so 15 minutes. So stop at 15 minutes. Ordinarily, professional traders wouldn't even go to that 15 minutes. Once they have done 1 hour and all of that, 1 hour and 4 hours. They're going to be waiting for the market to drop to those region and all of that. Now, when you go to 15 minutes, what you will have done is that you will have, been able to take some trade back down and all of that. So I tell you that this market can be very funny on its structure. So here, you are waiting for the market to drop either of this point so that you look for a buy. That's how simple it is. Now, why do we say, okay, if you want to add other tools, is to add MACD. So let's look at MACD. MACD, that's one. Then EMA. So 1, 2, I click it twice. All right. So I use 10 in the case of um, you know, the reef, but here, so I use 25 and 200. So let's quickly change this to 200. So change the color to red, and of course, turn to the second layer to just make it a bit thicker. Then go to this input and put 200. 200 moving average. It's not as if you're going to be having them on regularly. So, but you should understand. So sometimes people felt that's what you need to trade with. I said, no, you don't trade with it. It's just to help you identify, maybe you're the type that do not understand trend, perhaps don't know how to go about it. So just to support your ideology. Do you understand? So here we've done this. Now on my MACD, so you can see that this trend downward still continue. Some people use it raw like this. If you want to use it raw like this, you can go ahead and use it that way. So, but I changed mine to MT5 moving MACD by removing this column and then return back to this and change it to columns. This one histogram is cut off. Then I change the color to less shouting color. All right. If that is done, so I take off those label, right? So you know why you are using here? It's a different environment. So every other thing stand and then click OK. So then if you look at it quickly, you see that the market on 15-minute time frame is still on top of 200 moving average, perhaps. Now, one of the things about MACD that people do not understand that they want to use it for like trading and all of that. So MACD is not used for what to think. Say, when MACD cross, I enter. Yes, sometimes it happens that way because MACD is still combination of moving averages. All right, now, so but the point here is this. Now, if you look at it, if you don't know your market structure, everything you are doing in market is based on structure. So if you don't understand price action, you just be gambling your market. So now, if you look at it, the MACD, one of the biggest thing MACD and then like RSI does is to help you spot both hidden and an open divergence and even convergence. All right. So if you look at it, sometimes no, there's no divergence here. And again, it helps you to spot trade that does not have momentum. So you just rest yourself and avoid being caught in between. All right. So this is a very nice momentum. You can see that. Now, this momentum is very nice. Now, another thing I'll quickly explain to you about this 10 moving average. So here's to showing that, okay, the market crosses. So imagine if you are waiting for MACD down till crosses, that means you will be entering the market here. It doesn't make any sense. All right. Now it's just showing that, okay, the momentum for selling is still there. Now, another thing I always tell people is that if you're now 5 minutes, 5 minutes, 1 minute, 3 minutes, and all of that, you can live with it. So I'm going to change this 10 to 25. So let's change it to 25. All right. If you love it on 10, you can leave it. So I change it to 25. Okay. So you can see now when it crosses above market, candle crosses above it or below it and all of that. So, but if you have understanding of the structure, so it just is as a guide anyway. Okay. So now you are looking for, so here you have a double top, something like that. It's not well structured. Now the market, so we are waiting for a buy at this region. So if you're working on that, you could have take a trade, all right, maybe here. If you take a trade here, your stop loss above here. Oh, you take a trade here engulfing, and then your stop loss above here, the rally down. That's a very good profit already, and then in that order. So that could help you. Now, sometimes people go as 5 minute time frame, all right? But you should understand your structure properly. So doing all of these things. So now some will take the trade when everything still continues to go below the the moving average. So some use that 10. It aligns so much, applying in low time frame and all of that. So look at the MACD. You have the crossover, the momentum. It's telling you that the selling pressure is still high. All right. So, and then the more it's expanding, the better you are still holding on to the trade and all of that. So it's very, very simple, taking our trade with this stuff and all of that. So if we go to, oh, it was flip one I was analyzing. So it was flip two I actually want to analyze. Nevertheless, we're good. All right. So look at flip two. When I come, so let's go. So you're going to hide this here, all this your indicator. Okay, so let's go back to our daily time frame quickly. So let's go to daily time frame. Here is daily time frame. Okay, you want to do the same thing? Do that? Yes, yeah. So what do you do first? The routine first is to delineate by, all right, by key levels. So just gonna take this to delineate by key levels just to reduce my stress. So forget about here. Okay. So to delineate by key levels, all right? So I think this two is okay. So you don't struggle so much. Maybe you can just extend to this, all right? Right, so now, if you look at it, so the market on its own by structure, this is inverse head and shoulder. So this is like the retest. Yeah, so but the neckline is actually down here. So, but how far are we going to go? All right, so but if you can bounce from here, that's not a bad deal, okay? So now you want to look at the structure now, or perhaps yesterday candle, right? So yesterday candle was here. So that means this market, just like the other one, was selling. Why? The market didn't sweep the low, but it broke the low and what? Retested. So you are selling. So by the time you go to lower time frame, you're going to see it. So let's go to 4 hours to see the structure, right? So we're in 4 hours. So where is the structure? Oh my God. So those of you use trend line most time, is it wrong? No, it's just an imaginary line anyway. So you take it there from here. Ordinarily it should be like this, because the first one you saw was this one. Now, but since you are coming now, if you stand like this, what do you achieve? Okay, so it's still by structure. Okay, it's still basically by structure. So what do you have here? So on your 4 hour time frame, so you have this market that have changed from a downtrend to an uptrend, whereby you have this. Remember, you are looking at the structure. So you have this is a break of structure, or you call it sweep liquidity. Then you have a high over here. Okay, so as the market rallied up here, a break this, that is market structure shift. So you expect a pullback. I have a lot of people who have this patient to take trade accordingly, and that's why they can trade for longer period. So all of this, they are not moved. They stay, wait patiently. Why? Because as the market broke down here, yeah, so as the market came up and break down here, so the next thing, so take your fib from the low to the swing high, then to now see your PDRAs, okay? So your PDRAs is actually from the equilibrium to the OTE, all right? So now if that is gotten, so I take off this, then that means we want the market to return back here. So we actually have a fair value gap, we have another block. So the market return back. So if that happens, you are supposed to wait for 15 minutes. So it goes straight to 15 minutes. When the market, you wait. So probably the best setup when you go on daily, get the candle to sometimes to just get the, what do we call, the daily bias of the market. Okay. So the next you want to do is to perhaps look at your structure in 4 hours, and then you now have to delete your PDRAs and all right, and then with your area of focus. And once you get that, you wait when the 4 hour candle touches inside that place. Then you want to go straight down to 4 hours at 30 minutes. Sorry, 15 minutes if you are working on 4 hours. All right. So when this thing walk into that, that make a lot of sense, right? This is 15-minute time frame. Now, ordinarily, when you have a nice structure, Now, a pullback of 4 hours is a downtrend of 15 minutes. Down, beginning of an uptrend structure of 15 minutes is the startup of 4 hours return. Okay. And so that's why when you come to 15, but you can see this card is very funny. So, but definitely it has tapped into this market. We have different entry model, all right, either by power of three, change of state of delivery, or if you go to like 3 minutes, 1 minute, you want to see market structure shift. So, but you can see that if you are doing that here now, these algorithms are somehow funny, okay? You can't have a perfect structure, all right? Especially on Weltrade. So you have to understand it, because while you're waiting on that, the market will just continue to go and you will say, what's going on, as it were. So if you look at it, you pile entry and then take your stop loss as appropriate as possible. And then you want to take a trade. Okay, so let's go back to where we were and look at the recent place where we are now. So the recent place where we are is simple this way. So 4 hours here is this market. Now, it didn't touch down to the region, but remember, I will say it's a zone. So if it's I've been able to draw a zone, then you will have done something like this. Let's stay this way and clone. So you will have had something like this, because key level are actually zones and not a line. Okay. So now, if you go back here on 4 hour time frame, you probably want to check your 1 hour time frame. Okay. Checking your 1 hour time frame, you had something like this. This is a break. So this is a low, then this is a high. Then this high again created its own substructure as internal structure, perhaps. So what do you have? You have this market at this point, and then take over here, then move to this point, and that is what we have as a shift in market structure. So if that's the case, you want to pull back into the origin, and perhaps you have this as your other block. Okay. Now the market tap into it, create a liquidity and all the like. So by the time you go to 5 minutes, then you find, so if you go to 15 minutes just to create the last structure that will have taken a reversal and targeting that your point, that will have been something like this. Okay. That will be something like this, and this low here. Then we'll have this, then move up here. So if we want to take it normally, so that means we're going to do something like this. So that means from here, this is a shift in market structure. But to do whatever thing you do here, you just have to go back and do it again. So this is market structure shift. Okay, so this is a market structure shift, then return back to the origin. So what happened? That was a lovely one here. This one, respect that. So you have the other block here. Okay. Then you have a fair value gap here. So the market tap into the fair value gap and then reject with even an engulfing candle on your 15 minutes. So you sell. Normally, you target here for take profit one, right, or just trail down. Now, the market, what did it do? Very fantastic. Broke a structure. So this is a break of structure. BOS. All right. See what happened? It's a break of structure. Yeah. So this one is still prone to, is still vulnerable. This is a protected swing high. Yeah, this is a protected high. This is still vulnerable. All right, so what happened was simple. The market put that and then continue. So you expect to move back at different region. So if you look at this region, so you have to understand the dynamics in the market. So you expect that the market, this is your PDRs. And then if you look at your PDRs here, you have another block here. You have a fair value gap here, which ought to so respected. But the markets now, we have a void stepping up down here. Let's take off this one. So you had a void. Oh, sorry. So now the market rally back here. So do you just because the market turned up here, you jump in? No, no, no. So you wait for the market to rally. Market rally up here. What did you do? This is liquidity sweep, internal liquidity. No, this is a high. What happened? So what happened? It sweep that liquidity, return back to the range, and this is your entry after this candle. Oh, yes. So very simple. Now, but this is what we tell when you are trading, face one course, right? Don't try to trade too many instruments. If not, you will miss a lot. So this is it. Your entry was here. And if you like, since this was swept, can take your stop loss above here. And your first profit target will be this swing low here. That's almost 1:3 risk reward, right? You can see very funny market. What happened again? So you can say now this is a structure break again. Make sense? Yeah. So this is a break of structure again. There's a part of waiting. I don't do what do they call it? Is it order or limit order? I don't do that most time because I don't trust some of this market. So here we have this. Then that means if you take off from your fib here to just see where the market's likely going to come to. You know, I told you, I said this Weltrade does not, the instrument, sorry, it does not respect structure like that. So you have to wait and be dynamic to see. So look at it, you're expecting the market actually, even if it's not here, but this fair value gap, this is another block. So let's look at it. Okay. So this is another block here. So it came straight up. That's extreme, straight up. So, but I remember we said that's extreme premium. It's not bad. Isn't bad at all. Isn't bad at all. Now, so what happened? It tapped into it. Then look at the rejected candle. After close of this candle, this change in state of delivery. So what happened? You're taking a trade. Okay. See, patience is very crucial in this market. So your stop loss, yes, can be above this more or less like whatever. And I always tell us taking 2-3 positions are more important. So that's your stop take profit here, TP1. So and even all of these are liquidity. Then the market continue. So you can see how massive the market deliver. So if you're going to be trading that way. So this is not so you have seen the market travel down and will have given you a lot of money. So patience is very important. And one thing I see in Weltrade, if you have reasonable money, you make a lot of money in Weltrade. Yeah, that's what I can agree. If you have reasonable money, you can make a lot of money, but patience is required. Now, it has tapped into the zone, and then you come back to look at the market now. So let's look at the structure change here. So let's work out something. So we have this is a break of structure. So this is a high. So if this is a high, let's look at it. So I'm going to take it. So that's a high. And then this is a break of structure into the zone. So I'm going to have a reversal. So break of structure into the zone. We have this internal structure, never mind. So if that has been broken, then you can take your Fibonacci retracement from this swing low to this swing high. So you can see perhaps you're looking at, okay, look at PDRAs if the market will actually really turn. Okay. And now listen, if the market is going to come here, my first take profit, all of these places. So let's go this way. So the market is here, no decision yet. And then so if you look at it, this is another flow. Okay. Do we have any fair value gap? No. And so you allow the market to return here and then aligning, then you can take a trade. Your stop loss can be below here or entirely below this swing low. And then you allow the market to run. Tick to profit one will be here, then until you return back and all of that. This is very, very simple. All right. This is very, very simple. Okay. So this is what? Very simple. Now it's the same pattern you use for so let's look at the pain and gains, which is boom and crash. Let's look at it. The same way, we go to daily time frame. Very simple, right? Makes sense. So you can do the same thing. Okay. So you can take your key levels. So remember, it's supposed to be zones, but so let's take this. Okay, it's supposed to be zones. Okay. So I think we stop here. Okay. On daily, yeah, I think we have some point here. So let's go quickly to 4 hours to see the structure. Okay, so here is the structure. Even though it may be poor, but you have to understand structure. So I wouldn't have energy. Okay, I forgot to show the daily time frame. So candle close and open. Oh, that was a bad one the previous day. Doji, right? So that is a pause. Because this is this candle close above this. So this is a pause to a continuation. So I'm not going to get anything drawn yet. So let's go to 4 hours. Get it back. So go to 4 hours. Very funny market, right? So if you look at it now, if you look at your MACD, you can see very funny, very funny. All right, so let's go. So here we come. So that means this is actually a break of structure. Do we have anyone here? This is another break. Those key levels are actually break of structure because if you're going to do this internal, you work for a very long time. So let's go. Here, if somebody can see this is a break of structure, this is a swing low, and then a high. Okay. This is a swing low. This is a swing low and a high. So pull back to it. So which is what the lowest break of structure. Yeah. So you can imagine when you want to work with these guys to this point. Now that you have not come down, you have not have a change. So you see continue up. Now, so if you enable your moving averages, 200, you see that is right? It's still a continuation. Get that? So you go to 1 hour time frame. I really do not like any market that does not form a nice structure for me. So you can see when you're using your indicators, like slide trading, which what's it called? Weltrade instrument. So you can need so that to just actually work. So when you have a pullback, this is on 1 hour time frame. So anytime you're going to have this nice move, so you have a pullback by your structure. So here, then you have here this is a pullback. If you take it from here to here, you can see the entry point here. You come to your PDRAs, and then you find a trade there, and then nicely, a very nice one, right? Very nice one. Sometimes you don't bother to even go to lower time frame, like 2 minutes, 3, 5 minutes, 15 minutes. You go there, you can get more confused because I've told you the instrument here, you are trading against the broker's algorithm. So it can confuse you. Because if you come down here now, so if you come down to 15 minutes here, it will draw and draw and draw structure. So on your 1 hour, that's clear enough. So don't give yourself unnecessary stress. You get it? Oh, yes, yes. Because here is already like liquidity sweep and then a break. So liquidity sweep, a break. So look at the retest. So the retest is here. Now, but for me, once you was doing all of this, that means you get supported. Now with your support of, so let's take this. So with the support of your technical indicators, so you find, and that's why I like to trade in the direction of the spike. And then you see this, start the spike. So you have to be ready to get some patience. Very, very important. Now, it's a spike up here above this. So maybe the first candle that spike above and stay. So if your stop loss is going to be below this 500 and something points, so multiply it, maybe $54. Or if it's 0.1, because 0.1 multiply by 500 and let's say 550. That's $55. So you are trading with small amount of money, you probably may not be able to dare unless the structure is refined properly. But you can imagine this. So you probably will not close the trade. You can continue to trail it as long as the market stay above 25 moving average. So you begin to get worried here. So you probably take profit here because the market has closed below 50, 25 moving average, but it's still an uptrend because you are still above 200 moving average. Okay, that? So could make a lot of sense. And so if you check another instrument, maybe like the pains 600, right? You may not find exactly opposite, but you find different things together. All right. So remember, I told you you are trading against the broker algorithm, and so don't get it twisted. Okay, you can't find exact opposite. So this is it, right? 1, 2. Now, for those of you who subscribe to look at the pains, so this is purely on structure. Lovely. This is a nice structure, right? You see that? On your 1 hour, so I didn't go to daily, so I don't even have energy. So this is a low, this is a high. And so let's take from fib, from this low, swing low to this swing high. Didn't even get there, but it gave me a reversal entry, right? You get that? So this is it. And then take up place. So from this low to this high, this is a breakout structure. So from this low to this high, so this one makes sense. Coming to the origin, and then you are taking a trade. And then this one again, look at 200 moving average. Exactly. This is already a market to behold. All right, so that is it. Very simple to trade any of these instruments. But remember, patience is very, very important. Patience is important for you to maximize this trade. Lovely. If you have reasonable fund, you can trade you have reasonable fund, you can trade pains and gains. So let me take out this. I think the structure was very nice set up here on 1 hour. So if you go to your MACD, still showing you that the momentum is still up. So what can you find here? A low, a high, a low, a high, a low, a high, a low, a high. So you have to recognize your structure. This is a very perfect structure. So not all the time you find a nice structure this way. So now if you take your fib here from this low to this high, can you see that? Nice one. Very, very nice. And then you took an entry, quick delivery. Then from this to this high, nice delivery. Makes sense. Okay. So here you have another one. Nice delivery. Okay. Then here, nice delivery. Temptation can push you here to enter here. Yes, I know that because you find something nice here and you're already in the zone. But look at a fair value gap, nice one. So if you enter here, definitely your stop loss need to give allowance. So most time when I'm entering, so because all of this region are your entry point. So, but look at it, this is another block, and then this is a fair value gap. So anything that make you to enter anywhere here, your stop loss must be below the PDRs. So let's say you take an entry here now. Let's look at it. Long at the close of this candle, for instance, your stop loss must be here, which is not too long, not too big. Yeah, it's not too big, guys. This is just $25, $26. Yeah, if you use 0.01. So your take profit one will be here. That will be 40 something, because it's not up to 1:2 Then the next take profit will be here. Right? So now we're moving in that dimension. So it has broken the structure now, but you have to exercise patience for it to reverse before you can plot your fib retracement. Okay? If you have to, so that's it. Very simple. Structurally, and patience required. You have to have patience, but you will love it. Seriously, trust me, you will love it. So let's look at it. The paints. So what by structure? Can you see that? So look at the paints. Nice one. Nice one. Not the time you find this structure. That is the paints. Look at this since when this one, February ending. And then look at it. Lovely. Here you have, okay? Here you have, this is a sweep of liquidity. This is liquidity sweep because this is the high. This is a sweep. This is not a break. Once a sweep happens, so suspect market coming down, right? So here you have this. This is a low. So after the sweep, what do you expect? So you take your fib here to this point. Then you're targeting here. So all of these fair value gap, look at the extreme order block. So the market return back here. So if you are the type that don't, so okay, let's look at it. You wait, you can go to 5 minutes or you wait for this candle drop and then enter your market. That's why I said you need to have good volume. If you don't want to stress yourself in Weltrade, try and trade with $1,000 and above. You're going to make a lot of money. Trust me. But even this stop loss is not too big. Okay. It's not too big. I think 800 will be more user-friendly or capital-friendly. Okay. So you have this now. Then that's a trade. So as the market came back, this is a break of structure. That's a break of structure. Yeah. So it's a break of structure. So you take your fib from the swing low or the swing high to swing low. You have this. This is a lovely one. I think this one delivered very well. So this is your entry here, right? Your entry at that point here. Your stop loss at least above, and then your take profit first here, and then, oh, of course, if it says spike, so you can wait. Then the structure was broken, you wait again from here to here. I think this setting was powerful. Then this is the last. Then you have this. We kept rigmaroling here. So here we have the first high, major high. Okay. So this is the first major high, not going to this anyway. So that means you still wait for this market to perhaps drop before you find an entry. Yes, because this is a high. So if you take this now to this point, so it didn't deliver to this point. So here, you can take up this to this point here now. So you can wait for the market here. Okay. So there's a fair value gap inside here. So you wait for the market to drop here and give you a good sign of buying, you're buying up. Very simple. This is a lovely kind of trade by structure, and then you're going to be beautifully fine. All right. So, I didn't have time to do these key levels here, but it's important when you do it, it give you clarity. So go to the comment section, look at the Weltrade link there, register with it, fill all your detail. When you're registering, ensure there's a code there. And then when you're registering, put your email, put your password, then you will click a place that shows option. Click inside of it when it says sponsor code so that you can have access to us and then we can always maximize things together. All right. So it's very important. Thank you very much. You have a nice time.